Hey guys, and welcome to the video. Today we're going to be talking a little bit more about investment definitions and just general investment knowledge so that can help out anyone who's a beginner investor who just wants to understand what they're getting into a little bit more and build on that sort of financial education. So today we're going to be talking a little bit more about dividends. So first of all, let's get stuck into what actually is a dividend. Dividend is a distribution of some of the company's earnings to some of its shareholders. This is determined by the company's board of directors. Those who own stock before the ex-dividend date will be eligible for their dividends to be paid out as cash or as additional stock. A dividend is a token reward paid to shareholders for their investment in the company. Generally, larger established companies will offer predictable dividend profits paid out to shareholders. They tend to issue regular dividends because they need to maximize the amount of return for shareholders. Generally, companies in the following sectors: basic materials, oil and gas, banks, financials, healthcare, pharmaceuticals, and even utilities are some of the biggest dividend-paying companies and the most stable over time. There's three key definitions when we look for a dividend-based company. It's ex-dividend date, which is the date where the dividend eligibility expires. So if you buy a share after the ex-dividend date, you'll be no longer available for those dividends to be purchased or to be received. So you need to buy a share in the company or a part of that company before the ex-dividend date is run out. The ex-dividend date is first. Then from there, you get the record date, which is the cutoff date established by the company in order to see who the shareholders are who are eligible for the dividend. And then the payment date. This is actually when their company issues the payment of the dividend. The dividend yield. The dividend yield is expressed as a percentage, and it's a financial ratio that shows how much of a company pays out in dividends each year relative to its stock price. The dividend payout divided by the share price equals the yield of that company's dividend. So why would you actually purchase a dividend paying company? So generally they're a bit more stable. They've got a longer term relationship of profits in the stock market and traded as a public company. They don't experience as much fluctuations in the market. They can be a solid foundation for a portfolio or for a beginner investor who doesn't want to risk losing any money in the stock market. And they can serve as another form of income. So it's important, when that is said, to understand how much of equity or cash you're going to need in order to get a income off of these dividend streams. For example, if you're banking on $1,000 per year of receivable dividends from an investment in Apple, you would need $156,000 to return $1,000 per year with Apple's yield of 0.64%. If you were to invest in Coca-Cola, which is another dividend-paying company, you would need an investment of $29,673 at 3.37% dividend yield to get $1,000 per year. So you'll see that it's not a matter of just buying into these companies and then receiving a dividend payout and quitting your job. You actually need to have quite a solid amount of money behind you in order and directly invested in that company in order for yourself to start receiving a bit of an income from it. But the normal portfolio value, as it increases through time, will allow you the ability to be able to get paid out in dividends and actually earn a secondary or another form of income stream just from dividend payout. Hopefully this has helped, guys, understanding a little bit more about a dividend company, why you would buy it, what are some of the key characteristics that dividend companies offer. You can take away something from today, hopefully to work towards your portfolio and work towards your beginner investment understanding of the financial markets and how to get started as a beginner investor. Thanks, guys.